Hello everyone and welcome to the Profit Beginners program of B4X. Today we will be analyzing the Profit platform and we will learn on how to buy and sell, how to trade professionally, how to open and close positions, how to put a stop loss and take profit, how to analyze charts, and even more. Now first of all, when you start downloading the platform, you will have this view as you can see here. Alright, now what is going to happen is that we are going to go on the top right of the platform. We will click menu, select layout, and from beginner we will select trader. And you will have a different view of the platform itself. Now, first of all, we will concentrate on the first section, which is here on the top. Alright, here also on the right side, and then all the four boxes: quotes, my portfolio, log, and charts. So let's take them off for the moment. Alright, first of all you will have your username, which is your email. So my email is adam.wahlberg@b4x.com. The open positions, whenever you open a position you will see it here. Your entry orders, the account equity, this is with the leverage that is added to your account. The margin percent, alright, this is the margin percent, I will explain it later on. And the balance. Now, on the right side, again, you will have account equity, the exposure of the position, the available line, this is with the margin percent, use margin, the usable margin, open profit and loss, the balance, which is the amount of money that you have deposited, the credit that is offered by the company with the bonus, and the bonus percent. Now, here you see live account, but normally on a live account you will see deposit. When you click on deposit, you will have a small page opening up for you that tells you if you want to deposit, and you will have to select which type of deposit you want to make. Right, if it's with credit card or if it's with a bank transfer, invoice, anything. Next to it you will see more, and the only option that you will have is withdraw. You will click on withdraw and a window will open up for you. With the withdraw page and the steps to withdraw the money. Here you will have the payment amount that you want to withdraw, the currency on which you want to withdraw in, and if there's any comments. Alright, and then you click on submit. Remember that you will have documents to send for the withdrawal to be processed, to be processed, and then the money will be withdrawn to your account from 2 to 5 days. Now, moving forward. First of all, I would like to explain exactly what is margin and what is leverage. Now, first of all, leverage is what is basically, for example, let's say we open any account, alright, for example, $100. What the company does is that we multiply that amount of money up until 200 times. Now, why do we do that? It's very simple. We multiply the money up to 200 times simply because, let's say we open an account at $100 and we want to trade with that $100, it won't take any effect to the market. Alright, since the market is very volatile, goes up and down, if the market goes down by a very, very small percent, then the $100 that you traded with will be lost in a very, very short period of time. That's why what we do is that we give you a leverage. We multiply that money up until 200 times, so that when you open a position, you open a position with a big amount, and you're taking a lot of effect to the market as well. Now, margin. What exactly is margin? margin calculates the chances of you either making or losing money. Now, there is a rule on margin. It's very simple. You need to make sure that your margin level will be always, always, always higher than 1. Whenever you see that your margin level is below 1, it means that your risks of losing money are very high, and you need to avoid that. Now, there are 2 reasons why your risks of losing money are very high and your margin level is below 1, and I will even give you the solutions to it. Alright, reason number 1. Your margin level is below 1 simply because you're opening more than 2 positions. When you have an account of $100, this is an example. If you have an account of $100 and you're opening more than 2 positions, you're putting a lot of pressure to your account. And your margin level will be lower than 1. To avoid that, you will need to open a maximum of 2 positions. This is the solution number 1. Solution number 2, if you want to open more than 2 positions, all you need to do is add money to your account so that the leverage will be even more stronger and you can open more than 2 positions. Reason number 2 why your margin level is below 1, which is very simple. Again, with the same example, if you have an account of $100 and you're opening a position that is very high, for example, $10,000, and I'm talking about the leverage that is given to you as well, $10,000, so you're putting a lot of pressure to your account. Even if your $100 is multiplied up until 200 times. Now, the solution is, if you want to open positions, you open small positions. That's number 1. Number 2, if you want to open up a high position, all you need to do is, again, add money to your account so that your leverage will be much, much stronger, and you can open not only more than 2 positions, but you can open a high position. Now, in my professional advice, to start off with a good account, I would say that you will need to have an initial deposit of $250. So that, number 1, the leverage is stronger, and number 2, you can open not only more than 2 positions, but you can open a very, very high position. So that's for now. Now, let's move forward. Let's go on quotes. Let's click here on quotes. And this exactly is where we open and close a position. Now, here you have on your left side box view and on your right side a list view. Now, just a moment. I see that we're having audio problems. Alright, better. Now, on your left side, you see, for example, Euro USD, GBP USD, USD CHF, all the currency, commodities, stock futures, everything. Now, to add or remove symbols, all you need to do is to go up right. You will see Forex and CFD. Now, what exactly is Forex? If we click on Forex or CFD, you will have a small box opening up for you, like this one. Forex, this is all the Forex symbols, alright, including the commodities. Alright, so you can add them. So let's say, for example, Euro Canadian dollar. You click on add, and as you can see, the Euro Canadian dollar is added as well. Now, if you want to take off, for example, let's say we have the Euro USD on the box view, which is on the left side, you click on the small box here, and we took off on the box view, but on the list view it is still here. So to take it off on the list view, again you click on the checkbox and it's out. Let's put it back in. Alright, here what you see, let's take for example the euro US dollar. We see buy, we see sell, we see at a certain rate, we see here another certain rate. We will be analyzing what exactly is buy, what exactly is sell. Now, for example, if we take the euro USD, what we're doing, so on any position that we're taking a position on the euro against the US dollar. That's why we see euro USD. The euro is the dominator. Now, if we're buying euro against the USD, and if we're selling the euro against the USD. Now, when we're buying from the market, so the market sells to us at this rate, as you can see here, or if we're selling to the market at the rate that you're seeing here as well. Now, so we're buying euro from the USD. So basically, whenever we see that the market of the euro USD is getting stronger, we're buying. Whenever we see that the market of the euro USD is getting weaker, we sell. Now let's say for example the euro USD, click on buy, and you will see a small box of the position that you are going to take, whether it's euro USD or any other symbol. The direction will be either buy or sell. Buy euro, sell euro. The amount, remember this is with the leverage that is offered. And we have the limit type. Now on the limit type you have SLTP. Once we click on SLTP, the box will be a bit bigger. Now here you have limits expiration. Alright, this is I would prefer that you talk to your financial advisor. This is on opening on having pending orders. Now what we're concentrated about is the SLTP. SLTP stands for stop loss take profit. Now once we click on stop loss, let's explain first of all what exactly is stop loss. Stop loss gives you the chance of closing your position without losing all your money. For example, if I'm trading with $100 and I'm putting a rate on which if the market goes against me, if the market goes weak, and I'm betting that it's going strong, but it's going weak, so I'm losing. I'm putting a rate where I can lose a maximum of the amount that I choose. Alright, so let's say $20. So when I'm losing a maximum of $20, my position will be closed automatically. This is basically your stop loss. Your take profit is exactly the same, only on the profit version. Meaning that if I'm making profit, if the market is getting very strong, and I'm making profit, and I know that at a certain point, the market will go down. So I'm putting a rate on which the market will go up on a maximum rate, and before it goes down, my position will be closed. So let's give an example. If I'm opening a position of $100, and I'm making profit of $70, and I'm putting a rate on which when I reach a profit of $75, my position is going to close automatically. And the profit that I'm making will be added to my balance. Now remember, your stop loss and take profit has a certain range limit. Alright? Now, your stop loss always needs to be lower than the rate that you see here, 1.2685. So let's take, for example, 1.2680. Alright? So I am ready to lose a maximum amount of $11. Now, take profit, again, your limit range has to be higher than the rate that you see here, 1.2611. So let's put 1.27, 2719. Or let's say 1272123. Okay, so when I'm reaching a maximum profit of $9.50, my position will be closed. Or if I'm reaching a loss of $11.50, my position will be closed as well. All right, this is just a position that we're opening up. We're opening together just like that. All right. Now we click on OK, and you will see position, and the position ID was successfully open. We click on OK. Now remember, when you're putting a stop loss, depending on the amount that you're opening a position with, you need to understand that it has to be on the limit range. You can't put a stop loss too small, and you can't put a take profit too big. All right. Now this is basically the code section. Next to it, you will see My Portfolio. On My Portfolio, you will see the position that you took. All right, this is the position ID, the direction, which is buy or sell, the amount, which is in 5,000, the symbol, which is in Euro USD, the open and market rate. All right, this is the bid and ask, the profit and loss, the stop loss rate, and the take profit rate that you put. You can change it later on. And the date that you open the position. Once you double click on the position, you can change your stop loss and take profit. You can basically change everything. To close the position, all you need to do is to click on the small box to check it, and then click on close positions. For now, we don't want to do that. We want to analyze everything that we have here. This is on the positions that you're opening up. All right, again, open position, you can see it here. Next to it, you will see exposure. Symbol USD, open position, net value, which is 5,000, open profit and loss, and the average open rate. Here you have entry orders. These are orders that you're opening up, like, for example, with stocks, future stocks, CFDs, future contracts. Let me explain. Sorry, I guess I forgot to explain CFDs. CFDs are basically future contracts. Future contracts are, for example, stocks with an expiration date. Let's take, for example, S&P 500 and the expiration date. These are CFDs. All right, you can choose the preferred one, talk to your financial advisor about it, and then open the position with him. Here you can have all your closed position from a certain date here till today. You can click on show and you have all the positions that you open. Here you can have your account statement. You can run a report, export it to Excel, and print. So this is basically your My Portfolio section. Let's take these off. Let's click on log. Log, basically you search from what date to what date you want to see your positions. You can click on the position, you can export it on Excel. Alright, you can see exactly what did you do, when did you open and when did you close, the profit that you made, the loss that you made as well. Export it on Excel or even print. And here you will see the charts. Now, you can save the charts, you can load the template, you can load the chart that you previously saved. Alright, here you can select which one you prefer. Alright, the symbol, if it's the Euro USD, the gold, etc., etc. You can put on a 5-minute rate, 1-minute rate, 1 tick by tick. Alright, monthly, yearly. I prefer the 5-minute rate. Here you also have a rate of records, 50 records till 510. Again, I would prefer and suggest the 50 records. You can select again your preferred, I would say, graph. If you prefer having a graph like this, one like that. I personally suggest to use the candle ones. Alright. Now, you can move again from Monday at the start that the Euro USD started until the exact moment here. Now also what you can do, you can analyze it, you can see what exactly happened between what time and what time. Put on a graph. Alright. You can check it out. Calculate the percentage. And so on. Alright. Now again, remember, if you need the graph, again, like I said before, whenever we see that the market of the Euro USD is getting stronger, alright, so we're buying. So right now, at this time, it went stronger, it went up. So what we're doing is that we're buying, and when it goes down, we're selling. And it goes up again, we're buying, goes down again, we're selling. Now, a small strategy that everybody uses, which is very simple. These are basically the basics of trading. Whenever we see that the market, as you can see here, went down, we see 4 red candles and went down excessively. It is normally based on, it is normally doing a rebound. Every time that we see that the market here goes down, it means that it will automatically go up. It's called a rebound. This is a small strategy that everybody uses. Now this is basically on the charts. Now moving forward, here you can go on chat to chat with us, to chat with me personally as well. Next to it, you will see the event calendar. Once we click on the event calendar, and this is basically the section that I want to concentrate the most. Now, first of all, you can adjust your time zones by simply clicking on it and adjust it to any time zones depending on your country time zones. My time zone is Eastern Time, US and Canada. Now, here you will see all the events that is going to happen today. You will see the importance of the event, the currency on which the event will take effect, and the time on which the event will take place. Now, basically, I would suggest that you search for the most important one. Alright, here we have something here. We have 3 green bars. Whenever we see 3 green bars, it means that this is the most important event. We click on the event, and we read about the event. Once we understand about the event, we can go on the complete story, on the complete history of the event by simply clicking on the link here. You can go on the history, what happened before. Alright, we don't usually have that. This is very new. The event will take place at this certain time. And you will see on how it will take effect on the certain symbol. Let's take something that is very known to all of us. Let's go click on next on tomorrow's events. Great. Let's click on next. Sorry for that. Let's click on a very common event. Alright, here we go. We have something here, the GDP. Let's read about it quickly. Gross domestic product measures the annualized change in inflation adjusted value of all goods and services produced by the economy. It is a broadcast measure of the economic activity and the primary indicator of the economy's health. A higher than expected reading should be taken as a positive bullish for the New Zealand dollar, while a lower than expected reading should be taken as a negative bearish for the New Zealand dollar. Now, we understand exactly what the event is. We know that the event will take effect on the New Zealand dollar and will take place at this certain time. We can see here on the URL, and we can have the complete history of the GDP. We can look on the charts. We can see by ourselves what happened in the past weeks. We see that it is very volatile, so it is best to trade on the GDP. Now we saw here that it went down last time. Alright, there's a chance that it could go up, so we can buy New Zealand dollar against any symbols. Alright, we can also hear this on the history. We saw that it goes up and down. Like I said before, it's very volatile, and we can start trading on it, on the New Zealand dollar. So we need to keep track on the economic calendar if you want to trade more professionally. Now, moving forward, here you have also all the news. Also, here you have the daily market updates. So this is basically it on the Profit platform. Now, for more information, you have my email, which is adam.wahlberg@bforex.com. Feel free to ask me any questions. Thank you very much for coming.